welcome back to the RationalInvestor.com's Daily Briefing Recap. Kevin and I are trying something new here today. He's recording on the OBS, so I have no idea if that intro worked or not. Sure hope it did. Gave you a super long session yesterday. How long was I blabbing away there for? Like a half hour, 45 minutes. Let's try and refrain from the marathons here today, but it is a Fed day today, so I suggest to people who used to have an old rule when I was a broker, never trust the first hour of trading following a Fed announcement. I did hear TRIers were posting in the lounge that the FOMC minutes were leaked. They're, I guess maybe about 10, 20 minutes ago. So market might be front running this Fed announcement here a little bit as well. Looks like we're on YouTube, so that's good to see. So with the Fed day, be careful. Like I said, really, you're probably best not to trust the first hour following the Fed announcement. My general hunch, betting man, no idea, but my hunch is they're probably going to say economics situation continues to be weak. We do not foresee raising interest rates anytime soon, and we will take whatever steps are necessary to support the market, blah, blah, blah. We'll see how it goes. You can see US dollar index right out of the gate again. They did another one of these sort of head fake moves. And it's never a good idea, like I said, to read too much into price action right around a central bank meeting, because you can see, bing, bing, big FU, and right back to basically hurry up and do nothing. The crude oil market did indeed pivot back up and is enjoying a nice counter trend rally. So, we'll see. For our purposes, we paper traded short there at about 43 and change, looking for a dump down into the mid 30s. We were kind of hoping, right now we have our stop at scratch, and we're kind of hoping that we can start establishing lower highs and lower lows to move our stops down. No idea if that's going to happen or not. Man, we could very easily see this crude oil ratchet right back up, and basically we're right back on the sidelines again. You can see stocks rallied into recent peaks there from mid last week, especially against that rally high there. I guess that was probably like last Wednesday or so. And we're stalling out a little bit here, obviously around the Fed announcement. Be very careful, blah, blah, blah. Don't be surprised if we have another leg lower here on the risk assets. Just, if anything, what I'm a little bit worried about is you don't really want to see, if you're a bull, you don't really want to see the market rally into your Fed announcement, like kind of like what crypto's doing here. You don't want to see that. That's not what you want to see. If anything, what you want to see is the market soft, and then they sort of think of like sell the rumor, and then the news comes out, buy the news, and the market turns back up. So, and it's interesting how those Fed minutes were leaked a little bit earlier, like an hour or so ago. We were looking and seeing everything moving up. Everything's moving up. And it's like, that's not healthy. That's not sustainable. And, maybe now we have the news event. Wow, look at that top coming in on the S&Ps here. So be careful, of course. And our general rule is, don't trust anything you see in the market until a good full hour after the Fed announcement. We could see this crap all over the place here by the end of today. Kind of a boring comment there, sorry, but it is what it is. So risk was enjoying a bit of a bid, and you can see US dollar came off. Risk off, also enjoying a bit of a bid, and I sort of was musing with the audience today, and my OBS crashed halfway through the broadcast, so they only got half a daily brief today. But I was joking sort of half-heartedly with the crypto crew here today, just asking, if we see an image that looks like this where everything is pointing up, is that sustainable? Is that healthy? And the answer is no. Also, too, we pointed out that the yen has broken violently higher here. So I wouldn't be surprised if this gold is dragged higher. And it's interesting how the bonds in the US are lagging, but they've put in higher highs. That's leading me to believe that these are nothing more than counter trend rallies. And when they exhaust themselves, look out. Obviously, we have this big political event coming up in the United States of America here at the end of, in about a month and a half. So there's probably going to be a bit of uncertainty around that. And like I said, I didn't really like seeing risk rallying into that Fed announcement. And that's got me a little bit cautious here. Our breadth indicator on the site actually generated interesting results here today, which leads me to believe we're still kind of in beta with regard to this. So I don't know exactly what the math happened here, but it is interesting to see how we turned up on both of these. I don't think this is a real print. Something doesn't look right about this Dow print here, and how the S&Ps can quickly move back up to so bullish here after being so heavily negative. So something's not right with our data reporting here, and that makes sense. It's in beta. Our official launch is January 1st, so we're still sort of, ironing out the bugs. So something has shifted here. Kind of thinking, and this is what I guess I'm a little bit worried about, is we don't really want to see the market try and put in a bottom here, because by the end of today, we might see the whole damn thing roll back over. But if we're lucky, maybe these counter trend rallies can last a little bit. I did notice on, classic breadth data points that I like to follow off of sites like TradingView. Where are we here? Where the hell are they? Here we are. Here's that classic advanced decline line. It's trying to turn back up. You can see number of stocks making new 52-week high, 52-week low. It put in a little W. It's trying to turn up. Volatility index, I think they got everybody all nice and freaked out there last week, and it's working its way back down. And, interesting enough, on the volatility index, we could actually move lower here. So I'm not overly convinced that we're like crashing here. And interesting too, I like to follow Dow theory. In essence, a move to new highs in the industrials teal, but no new highs in the transports would be a Dow theory sell signal. And we're actually getting the exact opposite. Transports are moving to new highs, industrials are not. So believe it or not, actually, I think they could move the stock market higher here. I don't see enough anecdotal evidence here to say that a top is in. I think what's going on here, remember we talked about this, Fakezi into the elections. I couldn't believe the guy in charge of the states now is saying that he was actually, you go look at the news. I can't even comment on it. Frankly speaking, I was shocked at how blatant this gentleman just is completely lying. And yet his political base will probably just spoon it up. And the message will be now that Donald Trump is actually the COVID president. Turns out Donald Trump was warning us about COVID his entire presidency. He told you that this was going to happen, right? That's what he said. So don't get me started. Crazy world we live in. It's awfully tough for me to, really make a case that we're going to see any clear direction here. Jupiter, Saturn cross, all that craziness and stuff here. I'm seeing a lot of back and forth, and today in particular, I'd be careful here. Let's see what Mr. Powell says through his press conference here. If at the end of the day you see risk is all nice and ramped up and risk off is coming off, then I think we have a clear message. But right now, be careful. I guess speaking about our breadth indicator, it was interesting how we did talk a little bit about this potential reversal in the small caps. And they're enjoying a pretty nice little window here. Some of them are really popping. We had a few of our little pharma names just going absolutely ape shit here. And I tell you, We have this fun little group, TRISOF Club, our Secret Options Formula Club. We had a meeting last night. And yet again, another one of Kevin's stocks went absolutely bananas here. So this is Myomo. And actually, they just announced that the U.S. has approved their product to be billed by Medicare and Medicaid. Woohoo, gotta love that. Guaranteed business model. There's so many of these little ones. Look at that little guy down in there. I mean, I can understand why the breadth indicator is starting to turn up. Something like that actually looks like it's trying to turn. It's below value. It's back in the gap. It's got a cute little W working here. There's an inside bar. Is this we're taking a shot on? It's not a bad idea. And I was even joking with the community today. I like the idea we could actually trade circles around Mr. Barstool now. I think we could actually justify coming in and actually hunting some longs against these lows here. But, just like that OMG trade I showed you recently, if you're going to take these kind of shots and we lose these lows, you better get the fuck out of there. And I noticed that these kind of names that flounder and fail, these recent lows, man, you just got off. So it's an interesting market. Another one of Kevin's ideas looks like it's trying to put in another little W here off of bigger W's. And these stocks, I mean, look at that. That's ridiculous. I mean, oh my God, there's so much money to be made here. That is the type of the market. You can see there's quite a bit of green on the screen here. The only problem I have is the market rallied into the Fed meeting and then, following the Fed, everything falls apart. We see that a lot. It does happen in the market. So just be careful there. Recent purchases that I did pick up, they're just sort of sitting right where we bought them. I bought this W on Carnival. Came out a $3 billion loss yesterday. Ay, caramba. And yet the irony of it all they do is they just brought the market back down to the original W. Picked up pharma names, same sort of idea, just basically sitting right where we bought them. So, if the market does have traction, oh boy, look out. But I don't see anything that's really like, holy shit, I gotta just, face rip buy into there. It's kind of like 2020. These signals are marginal. They're not like, oh my God, you have to buy this now. Yeah. Kind of a boring message today, everybody. Sorry. TRISOF, we had, a couple of interesting names perking up. I keep an eye on this marker. I think it's got some potential right against its low, so you can see the range. I mean, that's an option name that we went and picked up recently. There's probably some money to be made. I love this Polaroid. I can't remember how to pronounce that. A very interesting trade location there. So, kind of like that breadth indicator that we were showing you. There are names that are starting to look really interesting. This is a funny one, Crazy Rail. I had warned people if you were in the 250 calls, you better make sure to have orders working. I got some September calls on the books. I don't know. One account we have, I haven't reported back. I haven't heard back from Zach whether we did any business today. I didn't get any off on my personal account, jerks. I was a little bit too slow on the trade there today. But nonetheless, big pop. If you were able to take advantage of that, way to go. All right, so there's kind of your day. Crypto, we've sort of talked about this recently, just sort of climbing the wall of worry. 38.2s got resolved. There's our good old 1 to 2 line that I've been talking to you guys about recently. My hunch is we're probably going to play around this line a little bit more. Usually, the stock market people, they love to hunt the underside tags of these structural levels to join this trade. Do they do it off the candle body levels? I'm getting the feeling that's sort of the level I would be watching, right in there. Just a little bit above 61.8, a little bit below midpoint of the reload zone. There, interestingly enough, there is our little Foggenbaum level, would be all the way up at 78.6. I still don't see any reason why this can't play itself out up into here. And I think we also talked too about how the profile really needs filling in here. So I think that's what's happening here for Bitcoin. Again, too, though, I don't like the fact that they're rallying this thing into a Fed day. That's not good. Usually, like I said, yeah, if you're a bull, you actually want to see the market soft into the Fed. And look at that. You can actually see S&Ps now, or might be even painting a little shooting star there today. I don't really think the story is Bitcoin. If you can get pullbacks into buying opportunities, we had a fun conversation looking at the weekly price chart of Bitcoin, overlaying things like cost of production models. It's fascinating how reload zone. Clearly, this is an important level for Bitcoin. I think the S17s are cost of productions in this area, S19s down in here. So you got your little sort of value fundamental window down here, and it aligns nicely with a technical window. Problem here, though, is has this thing actually gone and topped out yet? I don't think so. The easiest, you want to look at it from an institutional perspective. They always look at clotheslines. Do we have any M's or W's? You can see that M. This is the day Richard Hart cried on social media. That was fun. You can see the W down in here. I mean, it's just pretty straightforward. You can see the M that came in here. Didn't really get a W here. I suppose there were nice W's that set up that trade. A little bit of an M that came in there. V bottom, straight up, little bit of an M, but that's probably the best way I describe that. Ugh. I mean, if this really, the trend is over, right, we're going to get something that looks like a big honking M. So, if this trend is over, then it probably looks something like that. But that's not here right now. If anything, what we should expect is a test of these highs. Then if this is indeed a top, we roll over and come back through those lows. So if you see that, then the trend is over. I don't see that yet. So just slow and steady. Interestingly enough, technically, we're in a red box. That's not good. You can see where I'd want to invest in Bitcoins. Market can remain illogical far longer than anyone can remain solvent. Can we continue to work our way higher here? Sure, why not? It's 2020. Anything can happen. And actually, what's kind of interesting, I was conjecturing with the crew here today, but I see you sort of like A, B, and this is just a clothesline. A, B, C, D. Sure looks to me like we got a date up into this 14,000 area on a clothesline basis. So, too late to buy green boxes. You could probably let them have some if you did have the balls to step in here. Probably a little too early to call the top. And of course, trading windows. ETH got a little crazy there a month or so ago. Probably set up a nice little short trade. I think I told you we were kind of lucky. We got a double off on this dump here, but right now V top, V bottom. This is a mess. You gotta let this thing settle down before you get any new signals. So there's your state of crypto. It's sort of like the fluffies are kind of unwinding themselves. And that makes sense. The end of the summer. They don't call it the fall for nothing. Blah, blah, blah. And I like the idea of the whole market pivoting to the downside into that November pivot. So right now, I'm kind of like, bleh. If I happen to see names that are putting in those tight little double bottoms, kind of like that name I showed you of in the stock market there, I might go pick some stock up. Hell, if I see cryptocurrencies doing that. In fact, actually, there's a, stay on topic and sort of finish off the broadcast here today. I'm super jazzed about things like this. I mean, look at Digi. Digi's holding in here like a boss. But there was, there's some that I'm snibbling on down at the bottom ends of ranges. Can't touch that. There, this guy here came in at the bottom. Even Now even well, no, I guess that's I don't think Kevin bought any of this, but you can see nothing really to get excited about on these that we're nibbling on. I did take a swing trade here on this OMG, and this is why you have to obey stops and obey risk management if setups fail. I don't know where the hell the bottom on this is. This could get really dangerous here, but I'm gone. So. And what I wanted to show you was we're watching, of course, look at what they're doing on this Geo. So this is the kind of name that I like in here, and it's not really just moving an inch. So that's the kind of name that I would be more than happy just to keep accumulating. I've already bought some, so I don't need to buy anymore. Decred coming right back down against our lows, but I still like the name. It's a pretty good looking little name. Look at our little RLC actually just put in a W. That's interesting. That might actually be good for DeFi. Speaking of DeFi, we have these interesting setups. Spent some time in the daily brief walking through this harmonic. Chain, actually interesting. This setup in particular, it had its move stop to scratch level. So if you did take this short, you should actually make a little bit of money regardless. But I mean, gee whiz, we lose this midpoint of this channel. Oh boy. Be careful on these high flyers. They look dangerous. Look at this trend line break. Fractal there now. Oh, yeah. These energy webs looks like they're taking it apart here. So be careful here, folks. Be careful. So that's sort of the state of crypto right now. I don't think Bitcoin's really crapping out. I think they're still unwinding this DeFi stuff. You might find, if they can start putting in W's, this DeFi index, this should be a really interesting one to watch. If we can start bottoming out here in reload zone, show me some, higher lows and higher highs, maybe a momentum divergence. Let's get these moving averages all happy again, looking like this again. We might have a bottom come in here. It's a terrible place to think about shorting. You want to be shorting against the top end of range. And we're starting to get reload zones developing, but still a bit early for me to get too raw bullish. Anything now, probably what we want is let's let this trend line here be broken. Maybe a third tag, come down, break it, put in a nice W, and away we go. So still a bit early for us. And again, remember Fed, probably best for us just to leave this alone here until we get sort of clear direction out of things like risk assets in the days ahead. So. All right, there's your market summary. Sure hope you enjoyed that offering. Not really much new to say. But slow and steady wins the race. Hopefully I gave you some levels to chew on. FYI, they're shutting the power down in my building tomorrow, so I won't be on the site tomorrow. And of course, I won't be doing any of these YouTube videos or anything. So, okay, have yourselves a great day, everybody. All the best, and bye for now.